Uh, Good afternoon, and thank you for joining us for the next webinar in the Great Lakes Leadership Summit webinar series. We have a exciting discussion today talking about impact investment, which is a growing opportunity in the Great Lakes St. Lawrence region and the Great Lakes Impact Investment Platform as well. At this point, I'd like to introduce our treasurer, Rachel, our moderator, Michigan Treasurer Rachael Eubanks, who will be introducing the panel today and inviting our speakers to talk. Treasurer Eubanks, please. Thank you.
Yes, good afternoon. And I'm Rachael Eubanks, Michigan State Treasurer. I'm excited to be here moderating today's discussion focusing on the Great Lakes Impact Investment Platform. Today's session includes a spotlight on participating projects, as well as the opportunities and promise of impact investing for different types of communities where both positive environmental and social impacts are possible. ESG investing, which stands for Environmental, Social, and Governance, offers investors a way to grow their portfolios and earn returns while taking into account factors beyond traditional coupons and yields. Generally, we think of this as investing for good. The strategy has two goals: generating a financial return while also promoting a positive impact for the environment, social issues, and corporate governance. Having worked in the capital finance space for close to 20 years, this is a topic that has been growing in interest in the investment world for a number of years. But it does seem like we're hitting a turning point where the impacts may be beyond doing just good, but also translating into real and quantifiable returns. So we have an outstanding panel here to discuss this topic, starting with Mike Manning, who is the Executive Director, CIO of the Ontario Finance Authority. Mike's going to kick us off today with about 8 to 10 minutes of opening remarks. Over to you, Mike.
Thank you very much. It's a real pleasure being here. Wonderful to get the opportunity to tell a little bit about our story on the green bond space. So starting off the presentation here, I guess going to the second slide. Let's see, just bear with me for a second. Yeah, thank you. I'm having a bit of difficulty. Oh, there it is. Yeah, great. So starting off here, just talking a little bit about the province and its programs here. So the Ontario Financing Authority, it's an agency of the province of Ontario, and it manages the province's debt investments in borrowing program. And I'm sure, as you all well know, Ontario is Canada's largest province, and we comprise about 40% of Canada's GDP and population. This slide here just kind of shows our infrastructure spending plan over the next 10 years, and you will note the transit is a pretty good proportion of that, about 37%, so that translates to about $54 billion we're going to be spending on transit over the next 10 years. Just bear with me here for a second. Yeah, so next slide here just kind of shows the borrowing requirements that we have, as well as the diversification of our borrowing program. So the left-hand side just kind of shows the borrowing requirements that Ontario is facing in the current fiscal year. You see we have a sizable deficit, substantial investment in capital assets, as well as about $25 billion in debt maturities. So that gives us a total funding requirement of about $61.1 billion, and we focus on sort of long-term public borrowing, about $53 billion. So the circular slide on the right just kind of shows where we are right now. It sort of displays that we do have a highly diversified borrowing program. You can kind of see that we borrow in a host of different currencies, host of different markets, and currently domestic borrowing is around 77%, international around 23%. So that kind of gives a flavor of what our borrowing program looks like. Yeah, so next slide kind of just gives the history of Ontario's Green Bond program. So we started off the program back in 2014-15. It took us about 6-9 months to do everything we needed to do to put the program in place. And we ended up being the first Canadian province to issue a green bond. The green bond program, it sort of fits within Ontario's environment plan. And it's one of the initiatives that the province has for addressing climate change. So we're currently the largest, most frequent issuer of Canadian dollar green bonds. And this schematic here just kind of shows what the program has been looking at each fiscal year. So you kind of see it's gone starting off at 500 million, and currently this year we've done 2.75 billion so far. In 2019-20, we started doing 2 bond issues a year. When we started the program, we were initially just doing 1 deal a year, but since 2019-20, we've been able to do multiple issues, and we expect to continue to do multiple issues going forward. So I guess the first question is why is Ontario issuing green bonds? And I think one of the things that's really beneficial is just we have the scale of projects and the type of projects that can support a green bond program. I know I talked to many of the other smaller provinces, and they just don't have the projects to really launch a green bond program. So that's helpful for us. And in fact, our green bond framework, which we developed back in 2014-15, just kind of displays the types of projects that we can use to finance green bonds. And the big one being clean transportation, which is essentially transit, energy efficiency and conservation, which is predominantly energy efficient buildings. And also we have a category there for climate adaptation and resilience, which we just started to fill that category in just year before last. One of the appeals of this program for us, because we're in the financing business, was getting access to a new and rapidly growing sector of the bond market. It's not as new now, but it's still rapidly growing. It also provides good diversification of our borrowing program. I know that this summer, for example, our regular issuance was kind of in the summer doldrums, and our demand for domestic deals, our benchmark 5, 10, and 30-year deals, was kind of slow. So we decided at that point in time we would switch gears and do a green bond. And amazingly enough, the demand for that issue was overwhelming. We were able to print a deal of $2.75 billion, which is the biggest Canadian dollar green bond ever done. We had a demand of about 3.4 billion, and actually had 62 investors that were involved in the program. Another appeal is getting new investors for our program. We're a big borrower, so we're always looking to expand our investor base, and the green bond program has been fairly effective in doing that. Typically, every deal we have some new investors, and sometimes we have investors who don't buy us in Canadian dollars, but they are buying us in Canadian dollars for our green bonds. And we're also at the stage when we started issuing our green bonds, they were pretty much at the same yield that we issue all our other bonds, but they have started to provide cost savings. Our last deal, we had cost savings relative to other bonds of about $6 million, which is always a nice thing to have. And it's also allowed us to sort of showcase projects that Ontario has with environmental benefits. And as well, more and more investors now are kind of looking at the ESG credentials that borrowers have, and that's something even now that the credit rating agencies are getting involved in. So the Great Lakes Impact Investment Platform has kindly allowed us to profile 3 of our projects from our last green bond on your site. There's the Cordalucci Vaughan Hospital, the New Toronto Courthouse, and the Portland's Flood Protection Project. And details on those projects are sort of provided at the back of this presentation. And I don't think I'll go through them in detail, but happy to answer any questions anyone may have.
Okay, thank you, Mike, for the overview. Much appreciated. Next up, we do have Dr. Sanjiv Sinha, who is the Chief Sustainability Officer and Senior Vice President of ECT. So Sanjiv, over to you.
Thank you, Rachel. First of all, let's make sure that I do have the control of the slides. So Friday afternoon, 2 o'clock, 2:15 Eastern Time, PM. Thank you so much for joining us. It's a gorgeous day out here in Ann Arbor, where I am based, about 74 degrees, which is always awesome start of the fall. So Great Lakes Impact Investment Platform, my role here is to actually kind of acquaint you with what the platform is, what are its priorities, and then showcase a project that we have online that I was engaged in, and then pass it on to the third speaker. So we have a website. I will invite you to look at that, and also a LinkedIn profile. The project team, the folks that are working behind the scenes, includes Great Lakes Conference of the Great Lakes and St. Lawrence governors and premiers. ECT is my employer, so I work with ECT. University of Michigan is doing a lot of the blocking and tackling in terms of all of the content that you see on the website. Nature Conservancy came up with the impact metrics that we finally unveiled and have been engaged, actually, frankly, much longer than I have. And then Professor Peter Adrians from University of Michigan Smart Infrastructure Finance Center. So these are the folks. First of all, very quickly, a challenge of climate change. Just to show you a couple quick slides on this, I don't know if you're aware, while all of us were hunkered down in our homes and we're really worried about, and still are, as we perhaps should be, about the pandemic, US was experiencing a record number of weather and climate disasters in 2020. We had 22 different, more than $1 billion disasters in the last 12 months in the year of 2020. That was about 30% more than what we have had in 2011 and 2017, the other $1 billion disaster years. How does all of this impact us? Let me bring it down to the Midwest and the Great Lakes region. This is a map that you are looking at. Data in this map comes from American Geophysical Union, the science apex body in the United States. Actually, really, it's a global entity. And they estimate that the rainfall precipitation have gone up, the 99th percentile precipitation have gone up by 42%. What does that mean in terms of, what we are experiencing? Just to give you an idea, if you go to the Chicago region area, the NOAA's bulletin number 75, which tracks how the precipitation intensity and duration have changed, indicates an increase of 1 inch in the 100-year range, so 7.5 inches to 8.5 inches. And that essentially means that the greater Chicago region, just to give you a general idea of that, is getting 15 billion gallons worth of more stormwater than they were getting, 50 years ago or 40 years ago. So that should just give you an idea of the challenge that we are, struggling with and dealing with. So how do we deal with all of the infrastructure finance and funding? Well, there is actually, unfortunately, there is a huge gap. There are two ways U.S. funds especially in the water infrastructure sector, it funds the infrastructure. One is the Clean Water SRF, the State Revolving Loan Fund, and the other is Drinking Water SRF. And you can see the cumulative investments that it has made, both of the funds, in between 1988 to 2017. Unfortunately, the need, those numbers of $271 billion in the wastewater infrastructure need and the $473 billion in the drinking water infrastructure need, These numbers are EPA's numbers, and they don't even include the climate resiliency related impact that we are experiencing. Third-party nonprofits have estimated that climate resiliency needs will double these numbers. So clearly we have a significant gap between what the money that we need versus what we are actually putting in. Emergence of green bonds, Mike just gave an excellent example of some of the things that I'm actually about to share with you. So I think kind of segues that really well. It's a relatively speaking, it's a new, somewhat new, or at least a new-ish, debt instrument. It was first started in 2008 in Europe, and as you can see, every year, more and more green bonds have been issued. As of today, this data is actually about 3 or 4 months old. As of today, there is about $3 trillion worth of green bonds that have been issued. So clearly there is a theme here, which is organizations, municipal agencies, state governments, federal governments, other countries, they have clearly kind of, gone on to that and are issuing more and more green bonds. And Mike just discussed that with you, what was his rationale in the province of Ontario. Great Lakes Impact Investing has several goals. First of all, one key goal that we have is to showcase that the entire Great Lakes region is moving towards a just and sustainable future. How do we do that? Well, we do that by tracking the amount of impact investments that are taking place across the region. We also want to make a point that the smart money is looking to make an impact across the Great Lakes region. So it is not just a sort of a coastal theme to it. And last but not the least, we want to also showcase that the reach is broad-based. It is not just governmental organizations or NGOs that are interested in green bonds or impact investment. It's also corporate entities. So if you go to our website for the Great Lakes Impact Investment Platform, and I'll show you the link to that in just a second, you can actually see who has listed what. Over the long haul, this is not an immediate goal because the project has been live for less than 2 years, about 1.5 years or so. There are 3 goals to it: 20% reduction of nutrient inputs, 10% increase in energy efficiency across the Great Lakes region, and last but not the least, 10 to 15% reduction in emissions resulting from less energy use, sustainable forestry, and nutrient management, which happen to be the 3 buckets that our listings are focused upon. You can see that despite the short timeline that the Great Lakes Impact Investment Platform has been online, we are getting significant traction. These are the projects that we currently have listed. Collectively, they comprise of 36 different projects totaling almost $4 billion worth of impact investment across the Great Lakes region. You may be aware of the United Nations Sustainable Development Goals, SDGs. There are a total of 17 of them. The projects that we have listed on the Impact Investment Platform actually touch upon or showcase 10 of them. So we are very proud of that. And there are, thousands of pounds of nutrients that we are able to actually remove, for about 45,000 gallons of water through the projects that we currently have listed that we are able to affect. I will present my last 2 slides on something called an environmental impact bond. And EIB is nothing more than, it's basically a type of a green bond, except that it also includes a third-party evaluation of project outcomes that enhance impact reporting to investors. And depending on the trigger terms that you put in the environmental impact bond, you could reduce or change the terms if you're able to actually aggressively meet the better goals that you may have in mind. So why would you want to do an environmental impact bond? Well, first of all, it can result in, and this Mike just discussed that with us, a growing base of ESG and impact investors. And if you do a large number of projects simultaneously, and if you have the right appropriate delivery vehicle, for example, maybe you want to use a community-based partnership, it will result in cost savings. So let me actually show you one slide on the Buffalo Sewer Authority's environmental impact bond. To date, this is the largest environmental impact bond in the country. This is a relatively new type of a green bond, only 4 or 5 in the country thus far. This one is led by Buffalo Sewer Authority. I'm pleased to sort of profile this because I basically led this project together with Quantified Ventures in Washington, D.C. that did much of the blocking and tackling. Actually, they led all of the technical work that needed to be done. The bond is for $54 million. It attracts newer source of funding, as Mike said. It was 1.87 times oversubscribed among ESG-centered buyers. And in the wider market, we had almost 8 times oversubscription. And one of the nicest things that I wanted to point out here is that the implementation of green stormwater infrastructure that we are doing across the city of Buffalo, New York, with this, a vast majority of those projects will be done in the environmental justice area that really do need to see traction. So wanted to underscore that. Contact points here. Mike Pisker is the project manager for Great Lakes Impact Investment Platform. He should be your first go-to person. Since I am delivering this talk, my email is there as well. You are more than welcome to contact me if you have any projects that are of interest to you. If the words impact investment means something are connected to your work, please do connect with us, website and LinkedIn. And back to you, Rachel. Thank you.
Oh, thank you so much, Sanjiv, for those opening comments. And last but not least, we have Dr. Michele Pitale, who's the managing partner at CounterpointeSRE, who will also give us 8 to 10 minutes of introduction. So over to you, Michele.
Hi, thank you. It's really a pleasure to be here, and thank you very much for allowing us to present a couple projects that we've done in the region, in the Great Lakes St. Lawrence region. We are an on-balance sheet capital provider of sustainability and resiliency improvements to commercial real estate. We are also a PACE program administrator for several cities in Illinois, including the city of Chicago, California, and in Florida. Next slide, please. Next. So this PACE financing is enabled by state legislature, and it enables individual property owners to place a voluntary property tax on their building to finance improvements to their property. To the right, I've shown an actual tax bill of one of our PACE assessments, and it's outlined in red. You see it's just an additional non-ad valorem line item on the actual property tax bill. Through public-private partnership, we partner with a taxing authority and with a bond issuer in some states. Sometimes it's just a tax lien in order to provide financing of improvements as identified by the state legislature. All PACE-enabled states permit energy improvements to be financed through the property tax system. Water conservation, resiliency, and other eligible improvements vary by state. Next, please. So what is interesting about PACE is how the improvements to be financed respond to what I perceive to be the local need. If you look on the right, my favorite is in Washington, D.C. We can finance wildlife, the creation of wildlife pathways. But resiliency is definitely becoming more and more adopted, enabled by the state legislatures. Next slide, please. PACE can be used for mandated measures, and we have found that planning commissions are pairing PACE financing along with whatever the mandated measure is. In 2015, the city of San Francisco mandated soft story retrofits, seismic retrofits for certain properties that were at risk, and we were selected to partner with the ESIP, in the city of San Francisco, to offer financing for these retrofits. The most recent example of this is Local Law 97 in New York City, and the PACE financing was offered along with it to help finance the mandated measures. Next, please. The advantages of PACE is that it is 100% financing, and I can't underscore the advantage of 100%. It is no capital outlay to the owner. We advance funds to the contractor so that they should not be outlying funds to purchase equipment. It's fixed rates, long terms, up to the estimated useful life of whatever the equipment is that is being financed. It is self-amortizing payments. It may be treated off balance sheet according to however the property owner's tax advisor advises. And if there are tenants who pay the property tax bill under like triple net or gross modified leases, then the tenants will actually pay for the improvements to the property, and the tenants will realize the benefit of the reduced utility costs. The underwriting is not based on credit, and we do not collect the owner's financials. The underwriting is based completely on the property financials. This has opened up some solar financing and PPA financing, which otherwise has been limited to investment grade clients, because the underwriting is based on the property. There are no financial covenants, there's no personal guarantees, it's non-recourse. Next slide, please. The long term allows the conversation about whether or not to finance the improvements to switch from capital expenditure to operating expenditure. This is an example of a chiller for $500,000 that when the facility manager would go to the owner, they would ask for $500,000 capital outlay to replace a chiller. That's obviously a large CapEx expenditure. With PACE at a 20-year term, I estimated $50,000 a year on the extra on the property tax bill, but the estimated utility savings is $60,000 a year. And this allows the facility manager to present to the owner a $10,000 a year positive net cash flow if they replace their HVAC, which has made this very powerful in taking care of some of the deferred maintenance that is in our commercial infrastructure. Next slide, please. So this is an example of a large institution in Pennsylvania that was looking to replace a steam system, outdated boilers, and they were looking for low cost capital. It's a business with a low operating margin. It was a large, $4.3 million large capital expenditure. The PACE we provided for this facility enabled them to upgrade their HVAC. In addition, the Philadelphia PACE program requires a diversity and inclusion plan to be submitted as part of the PACE program to show jobs creation and the impact on the local Philadelphia community. Next slide. In Minnesota, new construction, there's usually cost overruns, or there's a certain budget for new construction. By giving PACE for new construction, we can ensure that the most efficient equipment is put in rather than funds going to the more cosmetic features. This is an example in Minnesota of a multifamily project in which we gave $5.5 million, and they invested the most efficient equipment for the property. Next slide, please. This is a building in Lansing, Michigan that two brothers bought at auction for $40,000 or $50,000, something like that. They worked weekends on it. They put together a very complicated cap stack of historic tax credits, brownfield tax credits, and economic development loan. There was a rain garden that was installed in this building, and CHP. These were two scrappy guys that put together a very sustainable building that was enabled by PACE as well as other public incentive programs. Next slide, please. In Chicago, which is the program that we administered, we did a project that was an old manufacturing plant, Zenith manufacturing plant, that was converted into commercial kitchens that was financed through new market tax credit. The new market tax credit source loan was $12 million. They needed it to be $16 million in order to leverage it up. They put 24 into it after the leverage with the new market tax credits. The $4.5 million of PACE allowed the source loan to be leveraged up to the $24 million that the owner needed to install very heavy intensive HVAC equipment for. There may be maybe 60 kitchens within this building. Next slide. In northern Michigan, there's an affordable housing project that is currently under construction. This construction was financed through a brownfield TIF, a CDFI loan, a Michigan Economic Development Grant, as well as a private construction loan that quite frankly, was only enabled by a USDA guarantee and the PACE financing of $1.85 million. This project is a new developer that is building sustainably. The project will have solar panels on it as well as a green roof that was financed through the PACE. Next slide, please. This is a old automotive manufacturing facility in Detroit that the owner was incentivized by the Detroit Stormwater. Detroit Stormwater gave them, I think it was about a $50,000 grant to investigate and do some design work for a green roof. This was allowed the owner to go forth with the design. I think this is an ECT project, actually. And we financed a $1 million green roof in this multi-tenant building that was being repurposed for artists and small flex warehouse space. Next building, next property, please. And PACE is being used more and more by corporates. They don't want to use capital in order to meet their sustainability goal. This is Swift Pork in Illinois that was looking to put a solar farm. They did not want to put out $4.5 million for the solar farm, which we financed. And this was also incentivized by the tax credits and the SRACs that were in Illinois. Next slide, please. PACE benefits all stakeholders. The mortgage lenders will see preservation of collateral value. They'll see deferred maintenance being addressed, and there is some evidence that there is a decreased default risk in CMBS securitizations if a building becomes more energy efficient. For local government, they're seeing acceleration of infrastructure improvements. PACE is being used to support sustainability and resiliency initiatives. For tenants, they're seeing utility bill savings, and the buildings are becoming green. And obviously for owners, they're seeing lower operating costs with improved collateral with no capital outlay. Next slide, please. Thank you very much, and back to you, Rachel.
Thanks, Michele. So if I can have all of the panelists turn on their cameras, that would be great. And I ask the participants for you to please put your questions, any of the questions that you have for our speakers, into the comment box. This is our time for the Q&A for these experts that we have to talk about this important topic. So thanks so much. I will get going with a couple of questions just to get the conversation rolling. And Michele, since you just talked, maybe we'll stick with you and keep the way that you've described how this works. You know, there's a positive cash flow that comes from these projects that is generated either from energy savings or the energy generation that's happening on site to reduce the amount of energy usage you're paying for. How do we ensure that those savings actually come to fruition in order for the projects to produce those savings and that positive cash flow year after year, as you mentioned? Is there a performance contracting? Is there other options for issuers to look at to make sure that they actually work?
You know, a lot of it comes from manufacturer spec and is from ASHRAE standards that is being estimated. I'm actually financing an 8 megawatt CHP installation that is a real concern. And so we can finance prepaid maintenance and service contracts, and actually we're financing a rebuild of it at the 10-year mark also is being included in the contract. And that's one of the ways we can ensure that the equipment functions as intended.
Excellent, thank you. Before I move on, we do have a question in the chat about the PACE program. So this question is, can property owners or communities use CPACE as a share portion for a federal mitigation grant?
So I'm not sure I can answer that properly, but this is at the individual owner level. They sign a financing agreement that agrees that to allow a tax lien on their property. And then they repay it that way. And then the construction is financed through, is financed. We wire to the contractor to install it. It can be seen, you know, somewhat as owner equity in a way. And that was sort of the basis of the Common Grounds project in Northern Michigan and the shoring up the new market tax credits, that when you have this money coming in, and that it can be seen that way.
Excellent, thank you. Mike, turning back to you. So first, congratulations on this huge green bond issuance that you had over the summer. It sounds like it was a tremendous success. Did you see, can you talk a little bit about the type of investors that you brought in from using this green bond designation? Did you see new investors that hadn't normally invested in the other forms of Ontario bonds that you talked about? And were you able to see kind of the reduction in yields or tightening of credit spreads just because you saw the increase in demand from investors?
Yeah, I think typically we've been getting sort of, kind of a slow and steady increase in our investor base for each green bond. So maybe we get, 4, 5, 7, somewhere that ballpark of new investors. So we're always quite happy about that. I guess we're always careful with our green bond program in terms of how we promote it. When we started the program, we were pricing at the same level as our regular benchmark deals, which again in itself was an accomplishment because the green bonds were quite a bit smaller. At that time, several years ago, we did realize that finding projects is a bit of a challenge for most issuers. So I'd say in the last 2 years, we have been getting relatively steady savings versus our benchmark bonds. I think our last time that was about 2 basis points. I think it was roughly the same for the previous year. So, it's one of those things where I think investors have a fiduciary responsibility to get the highest yield that they can possibly get. And at the same time, we're trying to get the best yield that we can get for Ontario taxpayers. So there's a bit of give and take in that process.
Excellent. And as far as the designation for the bonds, do you go to a third party to verify them, or do you self-designate the bond issues as green bonds?
No, what we did is there's a process that's been established by the International Capital Markets Association, and they developed they call green bond principles. And so essentially, when you're issuing a labeled green bond, you're pretty much obligated to sort of follow those principles. And if you do so, it's a green bond. And we've been a member of the Green Bond Principles Group since I think March of 2016. So again, credibility is the important issue here. So we try to make sure that we're issuing green bonds that we're following best practices.
Absolutely. Thank you for that. Next question from the chat is for Sanjiv. What are the appropriate first steps if a community is interested in an environmental impact bond? And also, how did philanthropy play a role in the Buffalo example? So 2-part question there.
And they are both awesome questions. And I also wanted to give a quick compliment to you, Rachael. I think all the questions that you're asking are common sense questions that a lot of people don't know the answers to. So I'm very happy that you're actually asking those questions. Let me take the second part of the question with regards to what role the philanthropy play in Buffalo Sewer Authority issuance of environmental impact bond. Some of the background work that we had done was supported by the Great Lakes Protection Fund, which, by the way, just as an FYI, is also the foundation that is funding the Great Lakes Impact Investment platforms. Much of the work that Dave Metzger and his team are doing is actually supported by them, so very much appreciative of that. So the background work of the environmental impact bond issuance was funded to some extent by the Great Lakes Protection Fund. But when we were trying to engage the Quantified Ventures team, because they needed to do a lot of blocking and tackling, to be honest with you, answering the questions that you were asking just now, because there is a lot of stuff that goes into the issuance of municipal bonds, green or not. It required a little bit of additional financial resources, and we leaned on that for Ralph Wilson Jr. Foundation based in Detroit and Buffalo areas. They were very generous. They had a very quick return, to our request. So they essentially supported the engagement of the technical team. Buffalo Sewer Authority also hired their bond under municipal advisor and Morgan Stanley to lead, and they paid for that directly themselves. So wanted to mention that as well. Can you remind me what was the first part of the question? Rachael?
What are the appropriate first steps if a community wants to issue environmental impact bonds?
There are some documents that I can share with you that I think that basically are contained in a toolkit sort of a format. So you should really kind of go through that. If you get in touch with me, and I'm hoping, because I don't have access to the sending my own email address, but if you get hold of Mike Pisker or myself, maybe one of you guys that just sent the web link to the attendees, if you could actually share that, feel free to get in touch with me. I would love to actually share with you a toolkit that we have come up with for environmental impact bonds and use of other public-private partnerships. It won't cost you anything. You're welcome to take a look at it. I think that would be the best use of the time before you actually get started on the process.
Yeah, it's always great to have somebody in your corner that's a professional that's done this before, and so that you're not trying to recreate the wheel. So these great resources that we have on this call are wonderful to help us do that. So back to Michele. So there's a question, and I'm going to add on to this question. So the question is, does PACE find any projects in Canada? And my sub question to this is, if not, if why not? Is it a legal issue? Is there a statutory constraint? And if there is, how, is there kind of some model legislation that we look at to enable these in our respective states and provinces?
So PACE is enabled in several provinces. I'm not sure if any have closed yet. Developing a program, setting the rules and the safeguards does take some time. But I would say that there's certainly a lot of movement in Canada. I believe there are PACE that has been closed in several of the provinces.
Excellent. And is there kind of a package of legislation that you think is kind of a model package that you would suggest states and provinces use if they're not in that particular state or province?
So here I'm going to go on my soapbox here. So,
yes.
So one hotly contended is lender consent and whether you need consent from a mortgage holder. First off, I think it depends completely on the tax lien system and the foreclosure process, and whether, for example, a very efficient tax lien system that does a certificate within 2 or 3 months so that there's really no tax deficiency is a very different situation for a mortgage holder than someplace that a foreclosure process cannot be initiated for 4 years. I personally like the Florida system that deals with this, which limits the assessment to a small amount, 20% of the just market value, which is the assessed value. If the assessment is to be larger than that, then lender consent is mandated. The lender is always notified 30 days before a closing. The advantages of this, there are a lot of regional banking officers that don't understand PACE. It's still new, and there's sort of a new knee-jerk reaction sometimes, and it's usually the smaller projects. I mean, I have gotten lender consent for $65 million from, a syndicated loan or the more sophisticated investors. Well, great. That's great for the larger commercial players. It's the smaller business owners that are being hurt by lender consent, and by allowing them to do a small, less than 20% of the assessed value, it allows, one project, it was $150,000 on a building worth $15 million that we could not get lender consent on. And all they wanted to do was just one small project. So that's my soapbox on something to consider.
Yeah, it's always good to know when you're setting this up, what are the pitfalls from the get-go. So I appreciate you sharing those. Absolutely. Okay, so going back to the chat, there is a question which I'll pose as a pop-up question for whoever wants to grab it first. What potential do you see for the use of green bonds for conservation or biodiversity projects that enhance nature and land and to help protect infrastructure and increase resiliency? Anyone who wants to take
let me get the discussion started, and I'm sure Mike and Michele have some input as well. I did want to mention before I try to dive into the response for that question is that, you know, if you look at the presentations that we just shared, if climate change is something that you think that we need to be worried about and we do need to make proactive steps to actually try to address it, you know, Mike and Michele especially presented to you examples that are really cutting edge, both in terms of mitigation as well as real resiliency adaptation measures that we are trying to take. In this space of green bonds and related impact investment vehicles, you know, the innovations are happening at a pace that is hard to even keep up with. I mean, yesterday or day before yesterday, I read the state of New York. I think I don't know if you're familiar with the SPAC, the Special Purpose Acquisition company, SPACs, SPACs, that are being created on Wall Street to make companies like, you know, Lucid Motors, which is a competitor of Tesla, acquired by a SPAC that basically is now, it allows them to kind of bypass the longer, more arduous listing process. The state of New York just announced a new type of a setup called NACs, which is National Asset Companies, and it is essentially sort of a setup very similar to green bonds. So I think from my standpoint, the speed with which we are, the communities at large, corporations, state governments, federal government, and various other countries, we are evolving, and the pace with which we are trying to meet the challenge of climate change is very impressive. There is a lot of greenwash as well, but there is definitely very significant, rapid movement in the changes that are happening in the marketplace. And I'm certain that the topics that you just asked about, biodiversity projects, it has already been in the mix. Mike or Michele, did you want to add anything to that?
Yeah, I would add that when we started our program back in 2014, that we developed a green bond framework, which is kind of leading edge at that point in time. But sustainability is becoming more topical these days, and not just green bonds, but social bonds are becoming more popular. So what we're doing right now is we're having a look at our green bond framework. We're probably going to modify it and make it a sustainability framework, and biodiversity will probably be included in that mix.
Michele, do you have any thoughts, Michele? You want to add?
A little off topic. So 2 of the cases I presented were green roofs, and they've, it reminds me of the Javits Center with their green roof and how they talk about all the biodiversity that's now coming on the roof in New York City. I can't remember how many different species of birds are now nesting there, but I think, there's lots of ways to make an impact.
Great, thank you. We have another question in the chat about the access to these unique types of bonds, whether they're green bonds or environmental impact bonds. How do we get them in the hands of individuals or retail investors? Is it at this point, are we only seeing institutional investors buying this, or are we seeing kind of broader, more mom and pop investment? And Mike, do you want to start with that one?
Sure. When we launched our green bond program, we definitely wanted to involve retail investors as well, but we didn't go above and beyond the way we sort of market other Ontario bonds. So typically, in our case, we sell maybe 1% of our bonds to go retail, and most of the rest are institutional. But we do like to ensure that green bonds are available through investment advisors. And there is a platform in development in Canada, I think it's the Montreal Exchange, where they're going to be marketing more green bonds to retail investors. So I think that the trend is moving in that direction.
Yeah, it seems like the participation of really true individual investors is just less and less over the years. So not surprising that you're kind of seeing retail outfits that are coming together to kind of package them up. So that's consistent with across the market. Any other thoughts on that one before I? Yeah, go ahead, Sanjiv.
And keep in mind that the universe of green bonds, as impressive as it is, it's all new. As in, the first $1 trillion worth of global issuance of green bonds took about 10 years or so. The second trillion, 6 months. So I think it is very rapidly scaling up, and I think there are things that are happening that would basically, I mean, to some extent, at some point in time, you really have no choice but to actually attract the retail investors. And I think Mike's answer is right on the money on that.
Yeah. So Michele, in thinking about this, kind of trying to bring this down to the individual level, obviously a lot of your projects that it seems like you're working on are a lot of commercial and industrial projects. Is there a residential role for PACE, or perhaps, if not today, in the future?
So we did administer programs in California and Florida that were residential and have, I think, over 8,000 closed assessments. The residential PACE, this is a new financing tool that, quite frankly, most of the commercial investors I speak with, it takes time to wrap their heads around it. It's in the home improvement network, which does have its issues with understanding and consumer protections to begin with. The marriage of a new financing tool in the home improvement industry, it may not be the time to introduce this into residential yet. And I think that this is a very controversial period. Our Florida program is, I think we were before 3 counties this week in Florida trying to work out various consumer protections. It's a new tool, and it just, there's new safeguards and just new thinking that needs to be applied.
That's very wise advice, so thank you for that. All right, well, we've only got about 5 minutes left in the session, and I would like to give the speakers any opportunity to provide any kind of closing thoughts or comments, best practices as states and provinces are looking to kind of dive into these areas or further than they are. Maybe shall we go in the same order that we started? Mike, do you have any advice for or final thoughts for our participants today?
Yeah, I would just add, I think we made the point already, and Sanjiv's done a very good job of sort of making the point that this is a growing sector of the markets, and it's expanding. It's going not just bigger in size, but bigger in scale and scope as well. So I think this is an area that's going to be continue to grow rapidly over the next year. And I know ourselves, we work with other government bodies and government agencies in terms of issuing green bonds, and it seems to be like a network out there where everyone wants to help each other out to kind of move this movement forward.
That's great. Thank you. In a great forum like today to share some of these best practices. So Mike, thank you so much for sharing your experiences and your expertise today. Sanjiv, any closing thoughts?
Sure. I will begin by thanking Great Lakes Protection Fund that basically provided the financial support to make Great Lakes Impact Investment Platform happen. I also want to invite all of you. I noted that one of our team members posted my email address and Mike Pisker's email address as well. Please contact us. I think we need to, whether the topic is, social inequities, climate change, or rapid pace of.
Oh, Sanjiv, I think we lost your audio. Can you make sure you're still connected? Oh, we can. I think we just heard a little background noise there. You might want to take a couple steps back and continue with what you were saying.
Can you hear me okay now?
Yes, we can.
Okay, perfect. So I just wanted to welcome everybody to the, please feel free to get in touch with me and with Mike Pisker. And whether the topics of interest to you are social, inequities or climate change or rapid changes in the ESG marketplace, I think there are things that we are trying to do collectively within the Great Lakes that are very encouraging and very interesting. And I just want to thank all of the entities, including Michele and Mike, that have actually provided their projects to be listed on the platform. And I'll conclude with that, Rachael.
Yeah, and thank you for your expertise as well. I know a lot of these are new and novel issues, and appreciate you providing your thoughts today, as well as providing your thoughts to your clients that you serve. So thank you. Michele, what are your final thoughts?
I echo that this is growing. I think that from 1976, which is when our affiliate Hannon Armstrong started with investing based on carbon counting, to now, I think in the last year or two, there seems to be the flood open of capital that is looking for ESG money, and the impact, this is exponential right now. It's a very exciting time to be looking to make a difference.
Could not agree more, and that's a great note to end on. So thank our panelists today for your phenomenal presentations and your advice. This has been much appreciated. And I will turn it over to David to close us out.
Thank you so much, Treasurer Eubanks, and hopefully you can see me or hear me at least. I have been having technical trouble throughout the afternoon, so I apologize for that. A couple of things that I wanted to mention. Firstly, and it was referenced by Sanjiv Sinha, we have had a great partner at the University of Michigan. We've had a number of students who have played an instrumental role in our work. It includes Drew Pappas, Ashley Craig, Samriti Gupta, and Sydney Swider. Thanks so much for the work that you've done with us on the platform's website, communications, and performance data reporting. Also wanted to make everyone aware that today's session has been recorded. It will be posted to www.gsgp.org later today, and we'd encourage you to share that with anybody who you think may be interested. We also have 2 upcoming webinars in our Leadership Summit series focused on invasive species and the economic development opportunity of carbon. So please tune in if you're interested in either of those 2 topics. I would like to give a big thanks to Treasurer Eubanks. You did a fabulous job of moderating, really excellent discussion from our panelists. We're appreciative of your time and energy. This is a really exciting time, as Michele said. This space is growing quickly, and it's a great opportunity for us to all get involved in something that's really positive and growing. So thanks, everyone. And last, thanks to all of you for tuning in. We look forward to continuing to engage with you, work together, and tackle our region's problems. So with that, goodbye and thank you.